Look, I think it's sentiment because, as we all know, I mean, as you get that 5% threshold, dangerous 5% threshold in 10-year, it's just viewed, right? Like the risk premium, the valuation argument for tech, that puts more and more pressure. Even though it's not necessarily inflationary, it's more because of good jobs numbers and others. But there's jitteriness. And I've seen it hearing from investors, especially being at CES last week. You know, it's almost two camps. On one side, fundamentally, things are, I think, are even stronger than we thought 3-4 weeks ago in terms of enterprise, hyperscale, what we're seeing from a chip perspective. But as that 10-year continues to move up, more and more worries about valuation, stretch, little sort of white knuckles, and that's what we're seeing in tech.
Dan Ives notes mixed investor sentiment in the tech sector as rising treasury yields spark valuation concerns. Despite these pressures, strong enterprise demand for chips and hyperscale computing underpins tech fundamentals. Investors worry stocks have run too far ahead of earnings, creating cautious near-term expectations. Apple remains a standout, with its massive install base positioned to lead the consumer AI revolution, though some believe its innovation is lagging. Nvidia, facing supply chain issues and post-CES skepticism, continues to see robust chip demand, supporting long-term growth prospects despite recent stock pullback. Ives remains optimistic, viewing current market dips as temporary setbacks in a broader bull market. He urges focus on fundamentals, predicting further growth as demand strengthens in key tech segments.
I want to hear what you're saying. I'm talking to traders, and here's what I'm hearing from them. They just feel like the streets all of a sudden got religion on valuation because of this big run up. You know, I think it was the Fed Governor Lisa Cook said the same thing, like everything's priced for perfection. So everything has to go right from here. Is that what you're hearing? Because I remember a few months ago, people were just like, valuation, who cares? This is like you always say, it's a bull market. It's a industrial revolution. Who cares about these valuations? There's no precedent for this, blah, blah, blah. Are you hearing from investors as well that valuation is the issue, or is the idea that maybe some of these narratives are starting to unwind?
Look, I think it's more of a worry that near term, like going into earnings, like can these companies produce relative to what these stocks are pricing in? I mean, my view is that streets are underestimating growth by 15-20% this year for a lot of the tech names. I think for some of them, like Nvidia, maybe even 30% over the next 18 months. So valuation in the near term will be the argument. But ultimately, if you look fundamentally at these things playing out, I think part of it is like investors and at least some of the traders, they're just concerned that some of these ran too quick, too soon. But Frank, this reminds me in a lot of ways like November 23, maybe one or two times mid 24, not even just Tokyo Black Monday, but before that. I'm just saying we've been here before in terms of these types of kind of agita moments.
All right. So bond yields are one factor, but let's just be honest. There also have been some questions. I was asking you a question that I have somewhat of an answer to because I'm just talking to investors. Some of these narratives have broken down. Like, for example, if you look at Apple, if you go back to January the 7th, there was that Moffett-Nathanson downgrade. Do you remember that downgrade?
Yeah, of course. Yep.
Where Moffett-Nathanson just kind of hit the laundry list. Like problems in China, Apple Intelligence may not be exactly what it's been billed to be. I mean, they just kept going and going with that note that all the gains for Apple Intelligence have been priced in already. I mean, they just kept going and going. And then I look at Nvidia since that same time. I'm just using that as like just kind of like a time period to pin. Nvidia is down more than 11% since that time. I mean, some things seem to not be going quite right. That also kind of coincides with CES, which you were just talking about. You were at, where Jensen Huang was there. And spoke, and people weren't blown away. They just weren't blown away. They weren't blown away by the robotics story. They weren't blown away by the supercomputer, the desktop. So, I mean, are you worried at all that investors just aren't as enthusiastic as they were before?
I'm not worried. Look, I mean, I remember coming out of Tesla Robotaxi today. It was viewed as a disaster, right? And then look where you are a month and a half later when we're sitting there, you know, when Trump gets in, and look what Tesla's done since. The point is like these things quickly change. It just keeps coming down to fundamentals. Like demand supply is 15-1 for Nvidia chips. So it's like that demand story is not changing because Jensen didn't detail some of the near-term things sitting there for that hour and a half. Look, that's just going to be the reaction. But I think it will be proven out in terms of fundamentals. What I believe is probably $5, $50, $6 earnings power. That's why I think Nvidia ultimately is a $180, $200 stock. When it comes to Apple, Rome was not built in a day. This was never going to happen overnight. I understand Craig. I understand like Moffin and the downgrade and some of the others. My whole view is it's the biggest install base in the world from a consumer perspective. The consumer AI revolution will go through Apple. Even when Zuck criticized on the Rogan podcast in terms of Cook, basically what he's saying is like they control it. Like we want to be let in. The reality is like Apple's not going to let them in. It just goes back to 25% of consumers in the world will access AI next 12, 18, 24 months through Apple. And that's our whole bullish view that on that upgrade cycle, 300 million have an upgrade in 4 years.
Okay. So let me I want to get you on the record on this. Does Mark Zuckerberg, does he have a point when he talks about the lack of innovation in any way in your mind? I mean, was there some validity to what he had to say?
Well, he definitely has a point. And I think that's maybe so, like when you talk about the downgrades or some of the negatives in Apple, that's maybe some of the frustration. Because even though you have 2.3 billion iOS devices, 1.5 billion iPhones, innovation, they have been behind the game. That's why they need OpenAI. Otherwise, they would have done it themselves. So that's why I believe, like over this next year, it's a huge prove-it moment for Cupertino to show that the innovation, whether it's iPhone 17, whether it's next version of Apple Intelligence, other devices, showing we're like, don't forget about us. And I do think there are good points that Zuck talks about.
Okay. By the way, I want to clarify what Moffin had to say. I actually pulled up the note I was reading earlier. Here's what they said in part. They said, even if it takes them a while to get there, talking about the AI race, we conceded that Apple was indeed behind in the AI race. They concluded that Apple's success in AI was already fully priced in. So just to clarify, they believe that Apple was behind. They also think that the excitement about Apple Intelligence already priced into the stock. Their price target 188.
But Frank, the one thing I'd say on not just on Moffin and others is like, look, this has been hated, and you've talked about a lot on your show, and this has been hated for the last $2 trillion of market cap move on Apple. So I do believe the street has underestimated just Apple's valuation because not underappreciating services and I think the install base.
All right, you and I also talked about this earlier, but just for the people that's going to catch this, when we talk about the rising dollar up about 1.5% over the last week, huge move to the upside. We talked about this a couple of 5 with Ives ago, just about the potential impact to earnings. We look at mega cap tech. What companies do you see as being most vulnerable when it comes to earnings to the rise of the dollar?
Yeah, Microsoft, Oracle, Apple. I mean, those are some big ones that are going to be clearly exposed, from a dollar perspective. Look, you'll see that factor into guidance. Call it about 100 bip, give or take, headwind now to 2025.
All right. Almost out of time. You're actually in the airport. You got to jump on a plane. I got to get some work done. Any last thoughts here? We give you the last word.
Look, last thoughts is, as we went to 25, we knew there'd be white knuckle moments like this. Nothing changes fundamentally. We're only halfway through the bull market, in our opinion. And I think these are just the opportunities to own that basket as it all plays out. That's sort of our game plan.
If you listen to CEO Jensen Huang during his CES keynote just a week ago, he was pretty hyped up, and demand still outstrips supply for the Blackwell chip that they've already started to ship at this point. But they've had some supply chain issues, so that might be a concern moving into their earnings. And their earnings aren't until mid next month in February, so keep that in mind. But we did see some bearish activity. A lot of call activity in here today, so there's some bulls buying some calls on this drop. But the one that stuck out to me was out in the February monthly cycle, the 130 strike puts. Trader bought 10,000 of those, paid an average debit of about $6.80. So that break even of 123.20 over the next 39 days. It's about 7% below the current share price in Nvidia. So while we always and typically see a lot of call activity in Nvidia on a daily basis, whether the stock's up or down, this one kind of stuck out to me because you're going to capture that earnings a bit here, and we've seen continued pressure in Nvidia since those all-time highs just a week ago.
Yeah. And look, bulls make money, bears make money, right? And then the pigs are too greedy. But really, I mean, that's the bearish side of things. And we've seen this coming off of the highs, to your point, in correction territory, down more than 10%. You actually said 13%. And how about Palantir? Much of the same. That's come down from almost $85 to $63 in a very short period of time.
Investor sentiment in the tech sector is cautious as rising treasury yields heighten valuation concerns. While fundamentals like chip demand and enterprise growth remain strong, stocks like Apple and Nvidia face scrutiny over innovation and supply chain challenges. Despite short-term pressures, long-term growth prospects driven by consumer AI and robust demand stay intact. Dan Ives highlights that these market dips are typical in bull markets and present opportunities for investors. Nvidia's strong demand and Apple's vast install base support bullish views, even as near-term skepticism persists. Fundamentals, not short-term volatility, are key to navigating this tech-driven industrial revolution. Are tech stocks currently overvalued, or is their growth potential underestimated? How critical is innovation in determining your confidence in tech companies like Apple and Nvidia?